Hello, 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 everyone. We are back. We are back. And I'm tuning in tonight from Jamaica, hence the whole new background and everything. So, welcome to another episode of Money Classroom. I am your host, Keisha Bailey, also known as Keisha the Teacher. And you guessed it, class is in session. Welcome, everyone. So, no matter your age, stage, or wage, you are here to learn how to make your money work for you, to learn all of the money things so you can also implement these money things as well. Don't forget, make sure head over to my website, profitjumpstarter.com/newsletter. Get connected, get hooked up to all of our investing tips and strategies that we regularly share with everyone who is subscribed to our mailing list. If you want to stay connected, want to make sure that you get all the money tips, you need to be on that newsletter. So you know the drill. Drop in the chat. Where's everyone joining us from tonight? Let me know in the chat below. All right. You know, I love these testimonies, love reading them. Very heartwarming to see the impact as usual. So I see we have some bright students tuning in. As usual, we have Raquel Francis first, first in class. Big up yourself. Raquel always here with us inside Money Classroom. Patricia, welcome as well, one of our top students inside the Money Classroom. Good night, good night. And Orville, welcome back. Big up yourself. We have Nicole Barham from Fort Lauderdale, Florida. Big up yourself, Nicole, who has become, an up and coming student in the Money Classroom, regularly here to get all of her money gems from us. We have Kamika as well, Kingston 19, Christine Davis, Jackie from Kingston, and your girl, Roxy from Bermuda. Welcome, Roxy. Big up yourself. Welcome to the Money Classroom. Always a pleasure having all of my students here ready to learn. So pull up your seat, take out your money book. You know the drill. Let's get right into our show.
Disclaimer. This is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
All right. So have you ever wondered what exactly do major business owners do to keep their business growing? What kind of strategies are they implementing? How do they find opportunities to keep on making money consistently and to capitalize on different growth opportunities that come about? Joining us tonight, we are going to have a business leader, business expert with us. We have CEO of Kingston Properties, Kevin Richards, who is going to be joining us to share his experience around business and investments and what's led to his success and his business's success.
Hi, Keisha.
Hi, Kevin. Always a pleasure to have you on. Big up yourself. Welcome to Money Classroom. So let's jump into first some background on Kingston Properties. Some persons may be new to the show, some, students who just transferred into Money Classroom. So let's talk a bit more about Kingston Properties and what exactly does the company do?
Yeah, man, sure. Before I get into that, I have to tell you, I love the theme, the music theme. It really sounds like money, like real. But anyway, KP, Kingston Properties, interestingly, we're celebrating 15 years of existence. We started out in April 2008, and we've been in the real estate investing game for 15 years. And we're proud to be still around and looking forward to the next 15 years and 15 years after that and 15 years after that. What we basically do is that we buy real estate assets, like an office building, a warehouse, an apartment building, stuff like that. And we rent those out to people. So we collect cash, and also the value of the property increases. So that's pretty much how we make our money. We're listed on the Jamaica Stock Exchange. So for persons who don't have the huge amount of capital to buy real estate, there's a vehicle known as a REIT, but we don't have REIT legislation in Jamaica. But we're listed on the Jamaica Stock Exchange. So if you buy shares in our company, that's a way of getting exposure to real estate without actually buying the real estate itself.
So how does the company approach the different investments? Because we're buying up real estate within the company. What's the strategic approach? How do you choose the companies to acquire for your investments?
Yeah, I mean, and it's no different for us than it is for how anybody would make a decision around investing, because you'll have to look at a number of things. One of them is, what's your objective? Some people have short-term goals, some people have medium-term goals, some people have long-term goals. It depending on which one of those buckets that you are looking at, that will determine the strategy that you will employ in terms of investing. Because if, let's say, we're going to call short-term less than a year, well, you're going to need a return in less than a year. Then your approach to investing is going to be different from if you're looking for a return in 10 years' time. Where you can be a little bit more patient. So I have to start at looking at what your objective is and your timelines. Because you have a lot of options out there, you also have to look at the return, because, let's say you have a pool of cash. You could do 1,000,001 things with that pool of cash, and you're going to look at what the return you'll be getting from that pool of cash if you went into option A, or if you looked at option B or option C. So you're going to compare the return on the different options available, and that will determine where you're going to be focused on. And, most people want to make money, so you're going to go with the thing that's going to give you the highest return. Now, be careful though, because people always confuse return and think that it's an absolute thing. You have to take that into context of risk. There are lots of people out there promising you a very high returns, but you don't know the level of risk that you'll have to take on to get that kind of return. So you have to balance your level of risk tolerance in turn and match that with the return that you're getting. Those I'd say are the three main key things that you need to look at.
So as we think about risk, that's important, because it's easy for a person to say, I just want to make some money.
Yep.
I want to make high returns.
Mm-hmm.
So I'm going to do this. Not realizing that the investment can have a whole heap of volatility. You're making money today, lose money tomorrow, lose some more money before you start making again. So for persons, fear comes in at that point. I said, no man, nobody told me about investing, that it could be this risky. What would be your advice for persons who are saying, well, I want to do a business, I want to make an investment. However, the money I have, I can't afford to lose it. Mm-hmm. What should they be thinking about?
Yeah, be careful of who you're listening to. The golden rule to follow: if it's too good to be true, probably isn't true. So I would stay away from the get-rich-quick schemes, because you've heard the term Ponzi scheme. Charles Ponzi existed in the 1920s or whatever, and Ponzi schemes to this day still exist. So there are always going to be people who will be coming up with some sort of schemes that say, you don't have to do much, just put your money here and you'll get this big fantastic return. Don't follow that. Best thing to do is to stick to the evil that as some people would say. If you know and understand something, that's where you should be focusing on your investment. And I'll use me as a personal example. And I have no fear in saying this, but I don't understand crypto or Bitcoin or none of those things. So don't come to me with crypto. I am going to invest in things that I understand. Until I understand how those things work, then I'm not going to be putting any investments in there. And I think that's an important approach you have to take. Understand the thing that you're putting your money in. Don't just say, okay, someone says this is the return you're going to get, so you just go ahead and put money in there. You need to understand it and be able to explain it to a 4-year-old to guarantee a return on your investment. So risk is very important. A lot of people also, they're already in some sort of activity. You just need to enhance it. One of the things I always recommend for people to do is to constantly learn. So invest in yourself, like education. You could see, let's say you're in a particular job and there is a prospect for you to get promoted to another level, but you don't have a particular skill, then invest in a course or something that will help you to take it to the next level.
Yeah, that's very valuable like advice, especially, that's why people here inside Money Classroom to learn, right? The students here, I like to say, they're astute because they recognize that to take my wealth building to the next journey, I need to educate myself. I need to know more than I'm doing. So let's talk about specific investments. So as a leader of the company, you're making decisions every day about different investments for the company. Let's talk about some that worked really well. What was some of the criteria with these investments that really stood out and that you found that really made them profitable for the company?
Yeah. Do your research. Listen to the market, and even if and I try not to make it too specific about real estate investing because I know your audience is involved in different things. But whether it's listening to your clients, but listen to the market, figure out exactly what is in high demand. Taking it back to real estate investment, we know that there is a huge demand for warehouse space. We've become a hugely e-commerce economy. So, by e-commerce, I mean that, we're trading stuff. We're buying stuff online and you need to store them in a warehouse before it gets to the customers. Everybody is familiar with some sort of shipping and logistics company where they're ordering online and things are coming. So we realize that there's a huge demand for warehouse space. So what we've been doing over the last 5 years is investing heavily into warehouse spaces. So we've acquired a warehouse building near to the port. That has done tremendously well for us. We acquired that in the midst of the pandemic, right when we're in lockdowns and all of that kind of thing. And that investment has paid off significantly for us. I would say look at our financials and you can see the kind of return on that. But I would say listen to the market. Let me use another example. Let's say you are in personal care services, like a barber or a hairdresser or something like that. If it is that your customers want comfort or they want additional services, look at what additional service you can offer. I see people are offering additional things like facials or manicures, pedicures, that sort of thing. Just listen to what your market wants, and that will determine how you make that investment. And that investment definitely will pay off.
Right. So let's talk also about some of the investments that KP REIT has made. We see an IPO, which was successful, and listing, an APO, which was also successful, and then
a rights issue as well.
Right. So you've come to the market in different ways. Let's probably break down those ways per person, because we have also probably some students who are thinking, one sweet day could be me doing an IPO with my business and an APO and then rights issue. So what stage would you say a business needs to be in for each, and what happens at each stage?
Yeah, I mean, if you're going to be involved in the public markets, that is listing on the Jamaica Stock Exchange, they have a whole bunch of listing requirements. So I would say get some guidance from a broker, one of the brokers that is registered with the Jamaica Stock Exchange. They can give you a lot of advice on that area. But usually you're doing this because you want to expand the business. You see an opportunity that you want to take advantage of. You need capital for it. There are many ways they can raise capital, whether it's via equity, as we've done, IPO first, then rights issue, then APO, or you could go traditional bank financing, which we've also done, which is a bank loan, secured by, whether it's secured or unsecured. You have all of those options to look at. The reason you go that route is because you see an opportunity and you want to take up that opportunity, or you're just generally looking to expand the business. So you have to look at your business and see, all right, are you at the stage for takeoff? Now, if you want to be doing that using the public markets, obviously people have to have some level of confidence in you and your business before they're going to trust giving you their money. How you build that trust? Yeah, you need to have your financials up to date, preferably audited. By audited, it means that some independent party has looked at your numbers and say, all right, yeah, these guys aren't making things up. These things are true. That's the first thing, because once somebody picks up your financial statements, then they can see that you are, a reputable sort of institution. In our case, for example, when we did our IPO, the very first investment we made in was in Trinidad and Tobago. We bought into some condos. We bought about 8 or 9 condos at what was then Carlton Savannah. In fact, that was our name back then. We've done a number of transactions, disposals, and acquisitions since then. We did our two rights. We've done 2 rights issues. We did one rights issues where we ended up buying up some condos, which is how we expanded into the U.S. market by acquiring condos in South Florida. Those we've held for a while. We've disposed. We're completely out of condos. Did another rights issue, which is when we bought that property, that warehouse property on the wharf. We also bought an office building in the Cayman Islands. And then last year we did an APO, which is additional capital raising. And with that proceeds, half of it, some of it we used to pay down debt because, as you know, interest rates were rising. So we took the prudent approach to pay down, particularly our variable rate. And by variable rate, I mean when interest rates by the monetary authorities increases, then it means our cost of borrowing increases as well. So we've paid out a lot of that debt, converted some of that debt to fixed rate because of the environment that we're in. And from that time until now, we're basically holding cash because you want to hold cash if the right opportunity comes up. When you have cash and you're going to the market, you have a bigger talk, as we'd say in Jamaican parlance.
But so let's look at it. We're breaking it down for the students. You're saying I use other people's money, which is the best money. We know that we use other people's money to do these different transactions. So first was borrowing to do all of the, you listed out a lot of transactions, IPO, APOs, rights issue, that's getting other people's money, investors' money. You got those funds and you used it to do the acquisition of land. You used it to buy properties internationally, and you did joint ventures as well. You still have some of that money left, and you're saying, well, in 2023, we're holding cash. So I'm linking it back for all of us. Could we consider that cash like an emergency fund then? For the regular person, is it that, KP REIT has their emergency fund ready to take advantage of any opportunities?
Yeah, it's a combination of emergency. When people hear emergency fund, they think, if disaster happens or some catastrophe. Yes. Yeah, it's a little bit of that, because, let's say your tenants, half your tenants went bankrupt and can't pay rent. We have cash that we can pay for the operating expense of the building, and we can pay to service whatever loans we have left. So there's a little bit of that in there. But the most critical thing, which is what the bulk of it is for, is if somebody, let's say we're going into a recession and somebody says, you know what, boy, I can't do any more, I'm going to sell my property. Then, we can come to the table. And because we have the strength of cash, we can close quickly. So, you can actually get good deals from that. So I always try and stay somewhat liquid. Because if you look at, for example, the world's greatest investor, who is Warren Buffett, that's somebody that's holding a lot of cash right now. And we know the level of success he's had in his, 60 or 70 years of investing. So, yes. And cash is, people say cash is king. Once you have cash, you can take advantage of many opportunities. So it's a combination of the emergency thing, but the bigger part is to take advantage of opportunities when they come up.
Right. And that's something we talk about a lot for students to understand, right? It's 2023. We have higher interest rates. We have a lot of instability in the world because the Russia-Ukraine war is still a keep, still happening, right? Yeah. Inflation still a keep, right? And there's all of this uncertainty. We need cash then because we're looking at Warren Buffett, billionaire, mega billionaire. He has cash personally, plus he has cash within his business.
Yeah.
We look at KP REIT, mega business as well, holding cash, staying ready for any deals that could come out. We need to then say, wait a minute, if that a one, what may I do? Is my emergency fund stacked? And we talk about having 3 to 6 months of expenses put away. So everybody should be thinking 3 to 6 months of expenses. Do I have that put away? Also, do I have enough money? So if I see an opportunity, I can jump on it. Because if these mega companies and mega billionaires are doing this strategy, I need to do it too because I want to be there. So I'm very glad that you brought that point home in that, you know, you use other people's money within the business, you acquired that, you used it for profitable strategies. I don't hear you saying, you know, KP Reed went on a major fixer upper.
No vanity projects.
Right, no frills.
No vanity.
Right? It went into profitable projects. And then, all right, we have so much money put aside now to get ready. We stay ready. KP Reed stays ready for any potential opportunity that's there. So we need to be doing the same thing. Students, we need to be doing the same thing as well. So let's talk about when things go wrong. Have you personally or the company done any projects that you said, you know, we messed up here? And what was the reason behind that so that we can avoid that pitfall in our own lives?
Yeah, you know, one of the things that I advise people on is a number of things. When you're going into a project, have timelines and be realistic about them. And when you make a decision, do all the research, do all the work. And if you do all the work, then you can stand with conviction that this was the right decision to make. Of course, you don't always hit it out of the park. Some people can't handle failure. And I would say we have to get comfortable with losses, get comfortable with failure. You know, I give an example. When we bought condos in Florida, condos did well for us. We went into the condo market in Florida right after the Great Recession, when, if you remember back in 2000, that period 2008 to 2010, where real estate prices in the US had tanked. You know, lots of people were on, you know,
just giving up their keys and moving out.
Yeah, man, yeah. So we went in and bought up a whole lot of condos during that time, got great deals, and the prices went up. I would say the mistake we made is that we stayed in them for too long, because then the market started to turn. So we came out still ahead in some cases, but, you know, if we had, you know, timed the market a little better and come out earlier, then would have had a bigger return for a shareholder. So you kind of have to know, kind of time the market, watch the market, also read the signals carefully and react when you need to react. So I'd say that's the one thing. I'm very happy, knock on wood, praise God, that, you know, we've had some pretty good investments that have done well for ourselves and our shareholders. You know, we had our AGM yesterday, and, you know, it was interesting. It's one of those AGM where I've never seen an AGM where shareholders were happy, but they were quite happy yesterday.
No, the returns have been good, and the regular dividends certainly doesn't help things. So within our classroom, within Money Classroom, we know about stocks, right? Everybody knows about, you know, I buy a stock, I'm a part owner in a company, and they can buy stocks in KP Reed, for example.
Correct.
Right?
And get dividends. I'm glad you brought up the dividends, because we're one of the better paying dividend companies on the stock exchange.
Right.
We get paid in US dollars.
Them love them dividends, and worse, US dollars, the US dollars, the stronger currency. Right? But so we have stocks, we have bonds, everybody knows those. But alternative investing is the new kid on the block. And I know a lot of persons want to learn more about that. So when we talk about alternative, you know, people say, you're in alternative investment, what are you doing? What exactly are they talking about there?
Yeah, I know in a lot of cases, they're talking about things like private equity, which is the main type of alternative investments. Their REITs, their unit trusts, those are a whole bunch of other alternative investments. But you mentioned something earlier, which is joint ventures, which I think is something that persons need to be looking more at, you know, where, you know, someone may see an opportunity, but you may not have all the cash available to go in that opportunity. You can do it jointly with a number of people. Because essentially a private equity is like that, where you have a general partner who is a person who manages the fund. Let's call it a fund. You know, they may have identified an opportunity. They don't have all the funds, so they go out there and find different people who have the strength of capital, and they'll take their funds and go after that particular opportunity. And they're managing it, but they're using other people's funds. So private equity, I think, is the main type of alternative, which is actually one of the fastest growing types of alternatives right now, because we know what's happening with the stock market. It's very volatile. Bonds are also very volatile. So people are looking at all different types of alternatives. So you could do it either via private equity or by private debt. Somebody might say, yeah, I have the cash, but I don't want to take on the risk of equity. I'd rather lend you the money at X%. Sure, it might be a rate that is higher than the bank rate, but the terms may be a little bit more flexible. And some people may package that and sell that as a product to individual shareholders. But those are some of the things that persons can look at, particularly if you have a small business, look at how you can raise funding from other persons creatively. And I'm
Yeah.
not giving advice. That's a disclaimer.
No advice around here. Yeah. But the thing is, when you think about alternative, it's because, well, the stock market this year, and especially in the Jamaican stock market, it hasn't really been going on with much, when you look at it in just generally, nothing are really gone. And then with bonds, because interest rates going higher, bond prices falling. So nothing are really going there either. But real estate, you didn't touch on real estate, which is the big one in alternative investments, right? Do you, and this may be a biased question, knowing where your views
You
on
know my answer.
do you think persons right now should be thinking more about real estate, given everything that's happening? Should I be thinking about, going to buy real estate directly or looking at REITs? What should I be thinking about? No.
The one answer I could say to that is it depends. It depends on your time horizon. For example, if you are looking at 5, 6, 10 years down the line, you definitely can look at real estate. Depending, and it also depends on your location, because in some markets, real estate not doing as well as in other markets. I give an example. In Jamaica, we've tended to see more stability in our real estate prices relative to, say, the US. And the same dynamic would apply to Cayman, which is another market that we're in. The truth is, both Jamaica and Cayman are islands with very limited land space. Population growth would mean that people will need places to live and play and work and whatnot. So real estate is always going to appreciate in those markets because there's limited amount of land. So I am confident in real estate in those markets. In the US, we tend to see a lot of volatility. Just that market tends to be a lot more liquid. And, a lot of persons use a lot of debt to finance those real estate investments, and when there's a crunch in the financial sector, that creates even more problems. So you tend to see a whole lot of volatility in the real estate prices there. I think given the trend with interest rates, them being prolonged for a while, because as we mentioned, inflation is still around. The monetary authorities, in fact, the Fed said that they are likely to continue to increase rates. Maybe it's just sounding off, but that's going to create some more weakness in the real estate market, particularly in the US. I think so. If you're looking, for example, to go into home purchase, I don't think now is the perfect time to do it. You could wait. Some people figure maybe later this year, maybe early next year, the tide might start turning. But watch for some fallout to happen there. As it stands here in Jamaica, as I said, our focus is mainly on warehouse type properties, whether it's a big warehouse or a small warehouse. In fact, we're building some mini warehouses because, again, it's the kind of demand we're seeing. We've tended to stay away from the residential market, largely because we don't have a lot of expertise in that area, and there are lots of other players in that space. So I leave them to deal with to that. In fact, there are enough players in that space. I don't think it needs another party in there. I'm not sure what value we would add in that space. So we tend to stick with the industrial and, to a lesser extent, office space. A lot of talk about what's happening with office space and the future of office, with people working from home. Is there going to be more demand for office space? I know we've seen enough where, some places landlords are defaulting on loans, and the commercial banks that lend them loans are having challenges. But when you think about it, the trillions and trillions of square feet of office space across the world, across the globe, that's not going to disappear. That real estate is still going to maintain some residual value. It may be valued less than what it is. Like next week, it could be valued less than it was a year ago or a month ago, but that's not going to disappear. So it's either, people will reconfigure them for other use, which is a growing trend. So you'd see people converting offices to residences or like apartments or condos and that kind of thing, or converting them into life science buildings or schools or all kinds of things. But you still have the high-end real estate where some people are still in the office. I think the whole hybrid model will continue. I don't know. There's some who feel that the work from home trend is going to expand and become, nobody will be in the office. I personally don't think so. I think there will be a hybrid model, and I still believe that there will be people who will go into the office.
What about co-working? Do you think that's that's new? Future of work. Let's co-work. Let's feed off each other. Let's meet. Let's network.
That's right.
I see co-working as like the Airbnb on the commercial side. So Airbnb is, the whole residential setup, but on the commercial side, it could be co-working. What do you think about
growing rapidly? Particularly, we're seeing it growing rapidly in the UK, because it's like perfect analogy. It's like Airbnb, short-term rental. You don't have the commitment of a long-term lease. Okay, I need the space for 3 days. I can go and use an office space or a conference room or a meeting room for a day or a few days, and without the commitment. So there is the growth in co-working spaces, which I see a lot of professionals moving in that direction. So also another way how big office buildings are being reconverted.
Yeah, for sure. So let's bring the discussion to where person may be thinking about business opportunities, because we're big on the wealth building. Where do you see the opportunities right now as a leader in business? What are you thinking about with regards with your business, and where do you think the future of business is? Just so we can get a little thing and persons will take it and go and implement. What do you see as a future of business? How can we make some money?
Boy, there's so much talk about AI these days and what AI is going to do to traditional jobs. So you kind of have to look at what are some of those areas that probably won't get disrupted anytime soon. And I think things like personal care services, because, a robot can do so much and no more. I think personal care services will always stay well. So spas, healthcare, hair, salons, that kind of thing. Those businesses, I think, anything that provides services to individual gyms, that kind of thing, those will do well going forward. And that's why, you look at, for example, in our business, we're looking at some sort of mixed use, a little bit of retail type of property where those services will demand, space. Those people will always want space. And I don't think much will change in that area. We're very much in the gig economy now. So where you see people are, we can talk about Uber and Airbnb, as we mentioned before, where, people are using the assets that they have to make money out of it. There are also other opportunities now where people can actually do ghost writing for ChatGPT can take that over. But anyway, there are people who are doing things like ghost writing for others. You need something written. You can actually hire persons who will actually do that writing for you. So I would look at those areas that are not likely to see huge disruption anytime soon. Anytime soon it would be the areas to talk. And I think personal care services is a strong area.
All right, and then let's wrap it now on the investment side. Mm-hmm. We're not giving anybody any investment advice, right? Kevin is just sharing his views, but where do you see the investment opportunities now? We talked about the business opportunities and whole heap, you listed out a whole heap there. What about on the investment side? Where do you see the opportunities? What's KP looking at, and what should we be looking at? Not just within real estate, but just generally on investments.
Yeah, look for something that's been beaten down and distressed or over beaten down. Because even when you look at this Jamaica Stock Exchange, there's some well-run businesses whose stock price is way down. Unimaginable why their stock would be at such levels. I personally, this is me personally, not giving advice. I'm talking about what I do. Is I look at well-run businesses that generate strong cash flows. Because if your business is not generating cash flow, um, you could have risks. You could face challenges down the line. So I focus primarily on businesses that generate strong cash flows, businesses that have high cash balances, businesses that have good management team that have been there for a long time and been, some people love to act on news, and they get excited when they hear something big announced, and there's some well-run companies that have been around on the market for 20, 30, 40 years who've they're steady, but they're always growing. I like companies like those. So
All
they might
right.
not give you the 20%, that 120% in 3 weeks kind of thing, but best believe over a period of you get that 120% over a longer period of time, and I'd rather stick with those.
Now they say slow and steady win the race, right? I'm a
Always.
big fan of that, right? I'm not in for the quick, slam bam, thank you, ma'am thing. And because I can't repeat that every day. I like knowing that, no matter what, this is gonna work. And the slow and steady always wins for me with there as well. So thank you
Uh,
for that.
And the important thing is that, we're busy. We're doing other things. We don't have the time to sit down and watch a screen and how a stock is trading. So, oh, yeah, we'll get in now and then try and get out later. We don't have the time for that. So stick with the slow and steady.
Nice. Love that. And we're going to leave it there. Slow and steady wins the race. Thank you for being on with us, Kevin.
My
Always a
pleasure.
pleasure. Pick up
My
yourself.
pleasure. All right.
All right. So up next, we have our show and tell segment.
This show and tell segment is brought to you by JMMB Group.
All right. All right. JMMB is back with us inside show and tell. We're going to now discuss how do we implement what we learned about different investments, different businesses. How exactly do we implement, right? Because now is the action time. So back with us again, Michelle, who loves being with us. Michelle is back. She's going to break down for us. All right. Now that we know about the business opportunities, we know about investment opportunities, we know that we need to be stockpiling the cash, piling it up brick and brick. How exactly do we do that? What do we need to do? So welcome to Money Classroom, Michelle Sinclair-Doyley, who is Group Financial Partnership Support and Financial Education at JMMB. Welcome, Michelle. Big up yourself.
Hi, Keisha. Hi, everybody. Hi, all the students.
Good night. Good night. So let's talk first about stacking up that emergency fund, because we talk about it a lot. Everybody keep hearing me sing it over and over. It's in the newsletter. Every day I'm singing on emergency fund, 3 to 6 months of expenses, stack it up. How exactly do we build an emergency fund? What do I do? Because I don't want anybody put money on the mattress. We're not doing that. And, rat or roach or someone go eat it up or somebody take it where, anything like that. How exactly do we build this emergency fund?
All right, so you're talking about what kinds of savings or investments are appropriate for emergency funds. So I'm understanding the question.
Yes, right.
All right, so once it's emergency funds, because it's an emergency, we don't know when it's going to happen, right? That's the purpose. We want to make sure it is in something that it is easy to grab the money. You don't want to have to sell an asset. So you have to go sell a stock. And when you're selling a stock, you have to wait on a buyer. And then you have to wait until a couple of days for the entire transaction to be settled. Or you need to sell a bond or sell something else. And so the idea is you want to have it in a savings account. Now, the truth of the matter, is that if you're going to have it in a savings accounts do not yield you any high rate of return. It does not. And the reason is that you can grab it at any time. It's really liquid. And so the first thing to put in our minds is the purpose of the emergency fund is not because it's going to get you the best rate of return, but it is going to prevent you from having to possibly take out a loan at a high rate of return if you do not have the money. So the
Or to
most
do anything
appropriate,
unscrupulous to get the money.
right?
We don't want to
Right?
feel desperate.
No, 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 no. When they're the chopping the line and all that kind of drama, right?
Right.
So at JMMB, we have several accounts that you can think of. One of them would be our easy access account, but because the money is so easy to grab, then you might start to use it for something other than an emergency. So we have something called a bonus saver account, and in that one, we would say that is the most ideal one
I love
for
that
that
one.
for that
And
amount of money.
I love it. The bonus saver.
Mhm.
So how does it work? What kind of interest I get? Because I teach students that we're stuck in the emergency fund, but we don't want to get 0.0001% return. What kind of
Mhm.
return are we getting on this bonus saver?
What I would say is you're not going to be getting 0.001. However, expect to be getting less than inflation rate. And the reason for that is it is a savings account.
But
And
what number, Michelle? What is it, like 4%, 5%?
it's
Give me
not
a
as low as
range. I know you probably don't know the exact number today, but is it 3 to 6%?
no, it is going to be less than that, right? It is going to be somewhere like in the 3 region. However, the focus is not on the rate, guys. The focus is not on the rate when it comes on to your emergency funds. Where you're focusing on the rate is that it is going to prevent you from having to take a loan at a higher interest rate. So once you're coming on to emergency funds, our focus is not the rate, and that is just the cold hard truth about it. And once you're going to be looking at a savings account, expect that it is going to be less than the inflation rate. What some persons do, therefore, is we can look at some currency diversification for you, because you might say to yourself, but 3 to 6 months of my expenses not holding my money that. And in some
Like,
instances, it is.
Michelle, every time I say it, I'm sure some people having some palpitations when they add it up because they probably sit down and know 1 month
Mhm.
times 3 and they see the number.
Yes.
Or they do times 6 and they say, no, Keisha must wrong. But they hear me keep saying 3 to 6 months, so I'm not wrong.
Mhm.
But
Mhm.
it can be a lot, yes. But what happens? We're saving it over time. We're
Mhm.
building it up little every month. We put aside until we build it up to this big number. So it's not impossible.
Exactly. Exactly. And I just want to share a real story with you guys, right? Because we're talking of real things here. And I know that many persons are still saying, why shouldn't we want to even talk about the rate and that kind of thing? What do you mean I'm not supposed to focus on the rate of return? But I want to share with you a story, real thing that happened. So just when COVID hit, and we didn't know that COVID was going to hit, and there's always going to be some financial crisis, okay? There was the 2008 financial crisis, there was NDX, JDX, there was the whole David Smith. I heard the presenter before talking about Ponzi schemes. There's COVID. Now we have Russia Ukraine war. So there's always going to be something in the market that is going to disrupt. And when there's disruption in the market, very often the asset prices fall. Very often.
You lose some money.
So you
You
can
lose
lose
some money.
money. So
Yeah.
here now what happened now to somebody that I know. A person called me one panic. Michelle, oh my goodness, my stock's gone down. I'm like, okay, yes, we know that it rises and it falls. What happened? She said, but Michelle, I didn't want to purchase my house, right? And the money, I put it in there, and now I find the right place. And as a matter of fact, I even need more than what I had anticipated. So the more than what you anticipated would have been emergency fund, right? Because it also helps you to grab some great deals. But what happened is that because the stock prices had fallen so much, if she had sold, she would have lost about 50% of all that she had worked for. No, let us
Good
come
story,
to
Michelle. Good story, because a lot of people do it. A lot of people are guilty of that up here in the money classroom because we want a quick deal. We say, well, I don't see no house right now, but I have this money and we don't go with the 1%, 2%. Me not depend that. No. Me gonna put my money in stocks because or I'm gonna do a quick IPO so I can double my money and get the deposit faster. That's a very risky thing to do. It is.
Very.
And you gave the story about the client that they come when they're ready for the money now, stock market turn, money cutting off.
Mm-hmm.
What you gonna do? Right?
Mm-hmm.
So this is where having your money in that high interest savings account, like bonus saver, really is the way to go, because you want the money safe and secure, right? I have a question for you from Cheesy Gully side.
Alright.
He's asking, Cheesy, which is one of our star students, Cheesy, is saying, what about using a money market fund? Can we use that for the emergency fund? Maybe we don't want to use a bonus saver. What about a money market fund?
There are some persons who do that, Cheesy. My own preference is no. And the reason for that is although the money market fund, money market instruments are instruments that are 1 year or less in tenure, it doesn't mean that they do not rise and fall in value though. And so you can find that because there is no principal protection, that you may need the money and you recognize that the value of the fund has fallen.
So
And
money
if
market fund can still fall in value?
it will still fall in value. It is not anticipated that it is going to fall in value as rapidly as one that is, for example, in stocks, but it doesn't mean that it can't. And so very often when you're talking about an emergency fund, you want to have some degree of quote unquote principal protection. And so it does not offer that. So something like a bonus saver, you put on your money, when you come back, you know how much money is supposed to be in there.
And it's in there.
And it's in
Most
there.
importantly, it's in there. Because that people, we used to take that for granted, but these days everybody know it. It's so good to know that it's in there, right? You can't put a value on that. So that's our emergency fund. We also spoke about investment opportunities out there right
So
now.
I just want to make a point. You can also put it in a CD. And
What
you
is a
can therefore, all
me know
right, so
you're
think
not
about
talking
a
about
fixed
the
deposit.
music.
Think about a fixed deposit. So you
Yeah.
choose whether you want to put on your money for 30 days, 90 days, 180 days, 270, 365. And it will keep on rolling over in that account unless you say, hey, I'm ready for my money. So that is another alternative that you can use, Cheesy. So you can look at bonus save, you can also look at our CDs at JMMB.
So those are better than the money market, because they said the money market fluctuates, and the same thing can reach me when I'm ready for my money, because the emergency come or the opportunity come. I want to make sure it's there, right? I want to just click, 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 withdraw, and go about my business, right? So that's the best way. So on the investment side now, Kevin spoke about looking for quality companies, looking at companies that they're beaten up right now, and there's value. So when I think about trying to find these companies, right, I will do my little research. I'm here in Money Classroom learning about investments. How do I know go implement? How I buy stock? We must go for do that.
So there are two ways in which you can do that. At JMMB, we give you choices. So if you are somebody who understands the stock market, you know when to buy, when to sell, when to hold, right? You know the song that said, you've got to know when to hold them, know when to fold them, know when to walk away, know when to run. Now, if that is you, then what you may want to do is to buy individual stocks. And so you can go on JMMB's Moneyline platform and you can choose which stocks you want to purchase, and you can go ahead purchase the stocks. If you want to eventually sell the stocks, you can go right there and you can put in the sell order for the stocks. But that is for the investor who knows the stock market and has the time to be following up the stocks. But what about the investor who you really want stock market returns, but you really don't know anything about stocks? You're not left out, because at JMB we have something called an income and growth unit trust. And all you have to do is you purchase into the unit trust, which already has a plethora of stocks contained in it. And we at JMMB are now doing the trading behind the scenes for you. So we know when to buy, when to hold, when to sell, when to whatever. And we're doing that trading on your behalf. And you know the best thing about it too, it saves your money, because many persons don't realize that when you're going to be purchasing individual stocks, you have to buy when you're buying, there's a fee. When you're selling, there is a fee. And there are several fees that can come up to like about 4%, right? When you buy and sell, it can come up to about 4%. With JMMB's Income and Growth Unit Trust, you don't have all of those fees. Now imagine you could have a period of 5 years for argument's sake. You know many times you don't buy and sell in that period and you don't have any fees to pay. So therefore, not only are you getting somebody who's going to be watching the portfolio because that is their job and they're experts at it. So you can go on living your life and you can go on doing your job or your side hustle or your company that you have founded while we are now managing that for you. And what you can do is you can be reaping the rewards from it.
So, all right. So then if I want to do the stock myself, I'm gonna go and do a equity account with JMMB and do my
Yes,
trades,
money
click
line.
buttons, do my orders, do my trades.
Mm-hmm,
That's when I want somebody to do it for me. Then you say
mm-hmm.
go with a unit trust like the income and growth.
Yes,
I will just
absolutely.
make it sure everybody write it down, Michelle. Write it down. Right? So
Mm-hmm.
Deborah, star student coming in.
Mm-hmm.
Saying, what about the management fees though?
All right.
Right? How are those?
Mhm.
Because the truth of it, Michelle, people want to know the fees, especially when in the money classroom, them up there with the investment knowledge. They up there. Deborah come back and just said, look here, Michelle, what
Of
about
course,
the management
Deborah, we
fees?
are going to have fees. However, when you look at what the fees will be, comparing with the amount of fees that persons would normally pay if they're going into the stock market, it is normally significantly less. And I know that you're going to say, oh, well, Michelle, exactly what are the fees? I'm not going to be quoting any fees on this program here. What we can do is when you have a conversation with us, that we can better explain the context of the fees. But you know, the last time I was here, Keisha was having a conversation with us. And she said, if you're going to employ a professional, you think you're going to get them for free? No.
That is
However,
that
what
is what
you
Patricia is saying. Patricia said,
mhm,
nothing not free. You pay,
right,
you get what you pay for, right?
exactly, you get what you pay for. So what we aim to do, because here's the thing, you know, if if a company is managing your money and it is not managing it well, then eventually what happens is that clients don't want it anymore. They don't want to actually buy into the fund. And of course, we want people buying into the fund. So we have the onus on us to ensure that we are always investing in the best possible way for our clients. So it's not a matter that you're going to be paying the fees and nothing will come of it. No, it does not mean that the fund is always going to be going up like this. Because since it is invested in the stock market, speaking specifically to the income and growth, it is invested in the stock market. It means that if the various stocks in the stock market go down, then you are going to see a decline more than likely in the value of the stocks in that period of time. However, what we do is before we say to you, yes, man, Deborah, this is the right thing for you, we find out what is your investment time horizon. And we advise that persons who have a long time horizon, like 5 years, those persons get into it because I want you to watch my hand. This is how the prices will go. So I hope you can see my hand properly. You see it's going up and down, up and down, up and down. But you notice it's going up, 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 up. So that is how stock market returns go. And so what we want to do is to look at the time horizon you have to know that, all right, even although you start here, so in 5 years, it's supposed to be here. So even although there will be adjustments along the way, it's going to dip, it's going to rise, then eventually over your timeline, it would have been a profit for you. And over the course of our income and growth, it has outperformed the stock market. And so for persons who say, why it worth it? Yes, it is. Now, it doesn't mean, as I say, that you look on it today and you look at it tomorrow and the following day you're seeing a huge rise. Because remember, we're looking at it for a more long-term perspective.
Nice. Nice. And Ingrid has just come in. So Ingrid is saying, because Ingrid up to the time, Ingrid said
Mhm.
60 days CD gives you 5.5%. So she knows I say we are immersive one can go there. She also knows it's not investment that right, but she's sharing
Mhm.
the facts, sharing the knowledge around the interest rates that's there. So another popular thing people talk about, Michelle, is business and investments.
Mhm.
So oftentimes people say, all right, I start a business, may I do my little thing. Should I be investing? Should I have investments in my business? Should my business be buying stocks as well? Do I need to have investments inside of my business, or do I keep the investments for my personal finances?
I think it is good for you to diversify the income stream of your business and also the assets that you have in your business. And so it is always something that companies look at. Most large companies own stock portfolios or they own real estate portfolios. So it is not that I'm saying only stocks or only real estate, but what I'm saying is that they do have a diversified asset base. So they do have their own investment. Because here's the thing, after a while, the company builds up X amount of cash. What are you going to do with it? Yes, you may reinvest some in the business, but then there's some of it that you do not necessarily want to reinvest in the business. So what do you do with that additional cash? It means that you would now want to turn it so that it can now make more money for you. And so one of the ways of doing that would be to invest in other asset classes. Because here's one of the things that's important to grasp. There's several things we call asset classes. So an asset class is a grouping of things that can make money for you, right? I'm trying not to reuse the word asset while defining it. So let's just say, for example, we have the asset class of cash. So that is money that is going to be on very short-term stuff. And then we have another asset class of real estate. We have another asset class of bonds, another asset class of stocks, for argument's sake. And businesses would also fall into an asset class. So all that's happened is that if you own a business, you have one particular asset class, but you don't necessarily want that to be your only asset class. So you may therefore have cash, you will have stocks in other companies, you'll have bonds, you'll have real estate. What you need is to ensure that you have a wise financial advisor who is able to look at the goals for your business and advise you as to how to do a good mix of them in order for your business to accomplish the goals that you want it to accomplish. You may, for example, want to expand your company, right? You want to go buy a building in the next 5 years or whatever. How do you acquire the money for that? They may say to you, let's take a mix of stocks, let's do a mix of some real estate. But you say real estate, but the person want to expand later on. Yes, because we can have a unit trust that is in real estate. And so what you have is a plethora of real estate properties already in that. And all you have to do is buy into it. So we can put together portfolios for you with the unit trusts for the various asset classes that we would manage for you so that you can concentrate on earning the money while we concentrate on churning the money.
Earn and churn. Earn and churn. Love it. All right. So bring up our QR code. Let's make sure, because we want to ensure that people are implementing. That's always important. We need that QR code on screen so people click, take out the phone. Make sure you're filling out that form so that JMMB can reach out to you and ensure that, we get you hooked up with getting your accounts opened. So, Michelle, parting words. What would you say? 2023, we spoke to Kevin. He told us about business opportunities and investment opportunities we want to think about. What would you say is the first thing, bright and early in the morning, that you would say persons need to consider, regardless of where you are in the world? What should be on the forefront of people's minds right now?
I would say, know your goal. What specifically do you want? Some persons want a house. Some persons want the house for investments. Some persons want the house to live in. So you need to know what your goal is and what is the purpose of the goal. And then you also want to know the timeline. And you also need to know, what does that goal represent? You need all of that information before you can really make a wise decision as to which investment or savings is the appropriate thing for your goal. Because what could be appropriate for me, who I'm looking for an income generating property, would not necessarily, and let us say I'm looking for that income generating property now, would not be appropriate for somebody who is looking for a home. and they're looking for a home in 3 years. And so you need to know what you want, why you want it, so the purpose of it, what it represents to you, and the timeline. When you come into us, then what we'll do, we'll look at how much risk you can afford to take and are willing to take. And based on that, we can now build out a portfolio for you. And then we can manage it for you so that you can achieve your dreams.
All right. We love that. Love that. All right, Michelle, we're going to leave it there. Thank you so much for joining us inside Money Classroom. Always a pleasure having you on to,
Always a pleasure.
how to earn and churn, as you say, earn. We're going to do our earn and churn dance. Everybody know, earn and churn. That's what we're all about. So always a pleasure having you on. Thank you.
Thank you, Keisha. Bye, everybody. It was a pleasure being with you.
This show and tell segment was brought to you by JMMB Group.
All right. Yes, yes. I see Claudine saying, your singing investment advisor. She liked Michelle's little, demo. Michelle probably needs to go do a little mixtape and a earn and churn dance and busway. So thanks for saying that, Claudine. All right. So guys, big news, big news, right? We have been speaking about our Build Wealth with Real Estate Conference, which is going to be August 19, 2023 at the AC Marriott Hotel in Kingston, Jamaica. That's why I'm here. We'll do the setup because it is right around the corner. We've been able to tie down our speakers for the event, and it's some big wigs. We're flying the experts. Here they all are. Some of them are familiar faces that you know about. Some of them you're like, who this? Our headline is going to be MG, the mortgage guy from the Earn Your Leisure team. He's going to be there. We have also Wayne Brooks, who did that viral reel recently talking about the Jamaican real estate market and that it's slow and, all of these things happening. He's going to be there to set the record straight and to explain to us the differences between different real estate markets across the world, because I know persons are thinking about global real estate investing. Are we thinking about Jamaican real estate investing? So anything you're considering with real estate investing, if you want to up your game, you need to be at this conference. Tickets are going fast. I'm just telling you the things. So reach over to profitjumpstarter.com/conference. Let's make sure I put that in the chat. It's profitjumpstarter.com/conference to make sure that you grab your tickets fast. They're going, right? You're seeing the faces. Kalila is going to be there. We have realtors flying in from the US and Canada coming in. We have lawyers who will talk about what to look for in a real estate transaction. We have developers coming. We have the bank demo come. Everybody's going to be in that one room. So make sure you are in the room if you're serious about building out your real estate portfolio. Grab those tickets now. Also, like up the video. A lot of you guys are on. Make sure you like up the video, and you're also subscribed to the Profit Jumpstarter channel. Make the algorithm do them thing. And your part would be you have to like up the video. Also, make sure you're connected to us on social media, on Instagram, Profit Jumpstarter, and here on YouTube as well, Profit Jumpstarter. And of course, the mailing list is there, profitjumpstarter.com/newsletter. So make sure you're connected there. As always, you know it. Knowledge is nothing without execution. Take the money book, execute up the things, make sure that you know exactly what to do bright and early morning. I will see you next time, everybody. Thanks for watching. Bye.